going to be doing a little bit of a market overview of what I kind of look for before I do anything with ICT. So I really look at three main indices, so to speak. It's going to be ES/NQ, whichever one. I mean, we can look at both, but for the most part, it's going to be the one. Dollar and then euro dollar. The reason for both of these is because if we're looking at an outlook for the week, the everything should be able to back itself up and line itself up with each other, right? So we know dollar generally inverses the indices, and obviously dollar needs to, truly inverse euro dollar in a sense. So all three of those indices essentially should line up and get us on the same page. If they not, then we know that we need to start looking for something else. So starting off with euro dollar on the daily, just for the sake of that, we need to remember kind of power of three and things like that. So it's currently Friday aftermarket close, so we don't even have Sunday overnight data really, unfortunately. So basically going to be starting off with what is euro dollar probably reach for? It's probably reaching for this low as a weekly objective. We could very easily see something in the thing of a weekly sense on a power of three if you go to the weekly chart. We have this down close candle. We do technically have an imbalance after this low of 101.95 or 595. So if we're going to do anything power of three related, we should ideally open up to come higher to possibly rebalance this and then continue and attack this low, or we aggressively hit the low off the open of the week. Both are possible. Then it really depends on how we're going to finish the week out. So of course we're going to be using economic calendar for this as well, but this is kind of just weekly outlook for what we're probably reaching for. So very possible euro dollar under one, right? On the week for S&P, you can see we're kind of reacting off of this fair value gap that we had here on the weekly / this breaker. So we know that there were old orders here, so it very well made sense to offset that, which is really what we're seeing here. Is we know that old orders are here. These orders need to be closed before we can presume in a certain direction. That's probably what we're doing. So areas that we could be reaching for, considering that this has already kind of been tapped from whatever this is, we technically have the imbalance up until about 41.73. So if we're going to be attacking any kind of lows to offset, you generally go for the lowest hanging fruit when you're looking for an offset. So in this case, it would be these two lows. So we should be possibly expecting a bearish indice, which would line up with our bearish euro USD, which in turn would make dollar bullish. So this is kind of how you have to line up everything to make sure that it's all on the same page. Otherwise, it can't really work. If you have, say bullish market, bullish indices and bullish dollar, like it doesn't happen that too often. So, and we'll check the other indices just because of it. It seems like they're all pretty much doing the same thing. NASDAQ even more so, hitting that fair value gap imbalance off this breaker. Still probably going for the lowest hanging fruit, and there's also a small imbalance right here. So technically we could be going for something along the lines of like 12.75 for the NASDAQ this week, which is only like 500 points away, which isn't that bad in all honesty. So it's not like it's an unrealistic move by any means. So if we're going to be going for these lows, and YM, essentially the same thing, hitting the same, it's going to look sloppier, but it's pretty much hitting the same deviation of time, which is, that week of April 18th. So all in all the indices are pretty much looking the same. So downside for all the indices, which should imply, again, bearish euro dollar, which would also mean a bullish dollar, which if you look at this, it's going to look inverse of euro USD, but it's pretty much going for this high. It's basically what it looks like. We can even see it kind of reacting off this old order block right here, this inside bar, and then it goes outside just to kind of show its strength, trades into it twice, and then starts to rally for the week. So if we're expecting dollar to make it to here, we technically have, an imbalance off of 106.84, whatever, but if we're going to be doing that, of trading higher on euro first and then going lower, that means dollar needs to come lower and then trade higher, which, it's the same thing inversely, which means indices, ES should as well trade higher than trade lower to start off the week. So might not maybe attack this low right away. There's a lot of things they could go for afterwards. We even have technically an imbalance off of 425, essentially on ES. And you can see that we're hitting, this is kind of what it looks like on the daily. The part that's really unbalanced is, if we were to refine this, would be this zone in here. So from here to here is technically what's not balanced. If you watch ICT's one of more recent videos, actually, he talks about what is technically repriced and how the up close from here to the down here, essentially we have the down paint of the stroke, so we need to come back up to it so we can go away from it. So next and most important thing is going to be obviously economic calendar. So I haven't even looked at it yet, so we're going to look for the first time, see what we have next week. We're going to look at high impact news, low impact news. What do we really have? So 22nd, Monday, we have nothing. That's cool. Euro. All right, we kind of got some flying stuff. So Tuesday should be popping. We have news at 3:15 and 3:30. So I have seen this. I can actually show you old trade that I tried to take trading actually flash services news for the euro and German. It was very interesting the way it did it. But also USD has that too at 9:45. So we kind of have a lot of action going on Tuesday. So a lot of places that we can really move, and euro will move a lot off of these two news events. It could very well do something completely crazy with dollar as well. So Tuesday is going to be a very big, important day. So very easily, honestly, you could probably take off Monday and just focus on Tuesday. Wednesday, what do we have? We have preliminary GDP. So that's kind of one report, and that's really it. We have a medium overnight, which shouldn't really matter unless you trade London session itself. But for the most part, we're looking at Thursday, and Tuesday is going to be our high impact days. Wednesday, we have some stuff. I've seen crazier stuff. Not too worried about it. I haven't noticed that durable goods do cause that crazy of movements for the dollar, so I'm not too concerned about it. So ideally, our high impact days are going to be looking to trade Tuesday and Thursday. And then Friday, we have core CPE, and then Powell speaks at 10 a.m. as well. I don't know what this Jackson whole thing is. It's been popped up in my Discord members the other day. I don't know why, but so essentially we need to be looking at how we're going to utilize these 3 days as areas to move the market in order to line up with our initial biases of what we were talking about earlier, which was, lower indices, higher dollar, and how we can frame that in order to make some kind of move. So if we're planning on doing that, we could potentially, move up, then move down, then move up. Although, see, this is why, again, that you need to go back and forth and compare timelines about what could happen and compare the argument for one, right? If we're still looking and expecting a bearish close weekly candle, right? Bearish close weekly candle, it's going to open up, accumulate higher, and distribute lower. Power of 3, right? Open, manipulate, go the other way. So we need to think that the same. We're going to either open up, manipulate, same kind of thing, and then go this way, distribute lower, right? So that means we should, for sure, Monday, probably expect either sideways or semi-bullish Monday in order to make that happen, to allow us to get positioned for Tuesday's move if we're expecting to the downside. Or Monday, still bullish, Tuesday, still bullish, and then maybe does a bait in the middle of the week. ICT has said that, high of the week can come at the very latest. Essentially, you're looking for New York session Wednesday or Tuesday. 70% chance essentially it occurs on one of those two sessions is New York Tuesday or New York Wednesday. So it's really what we're going to be looking for. So if we go down to the daily, we're going to have a bullish week to start it off. We could have something very easy where we maybe take out the lows, come for the highs to rebalance, and then distribute lower. Now, in terms of movement, we look at the weekly range of what we've had. Reaching down to this low at 70 is near $15 move in SPY. I would not say it's unheard of because it's really not, but it's August. So we want to take things very lightly and not really, push for something crazy. Just truly, we should be shooting for 411 as our weekly high and low. It's very similar to the daily. All you're really doing is looking at previous daily highs and lows to be shooting for. That's what we did, and how position yourself on Thursday going into Friday was we were positioning for essentially lower prices, attacking these daily levels. It's really what you're looking for is attacking daily levels. So if you look on something that's smaller like the hourly, we can see that we have definitely shifted bearish on it. We still have these two daily lows to take out, as well as this one that we technically created today on Friday. So these are kind of our downside targets, and then we have this very, very large gap that is going to need to be, repriced. This is from I don't know, CPI, but it's very interesting because Nasdaq is already digging into that level because it's a gap from August 10th. So NQ is already kind of digging. It's already taking out the lows. So NQ could possibly be showing that, those daily lows that we're holding on ES haven't been broken yet are very much going to be broken, which would infer that also YMs needs to be broken as well. So if we're looking for some kind of downside move for that, to possibly go higher maybe, but we're going to focus on 1 week at a time here, right? So we could very easily, dump it lower, trade into this, set the low of the week, and then return to it, or open up higher in some sense, possibly take some early participants out, and then continue lower, and close it on the week. So for Monday, we have a gap here on we do have kind of a gap here. It was rebounced for the most part off this high from this morning, and then traded lower. So again, we're just looking for these lows to be attacked, and our main days are essentially Tuesday, Thursday, and Friday. Monday's nothing. Tuesday's action. Thursday some action, one action I should say. Friday, two quote unquote 1.5 actions. Because even though Powell speaks, it doesn't always move like that. It has, but it hasn't in the past. So it really is a 50-50 on Powell speaking. Just because it's a person. It's not numerical data that you can look at or report in that sense. So very easily longer term, do something like this, come down here, go up higher, because these highs do have no reason to stand. They should eventually break. But if we're looking taking this 1 week at a time, ideally we're looking to finish the week down here. So possibly relax it Monday, do whatever, start attacking these lows Tuesday on the news reports would be a great time to do it. And I can show some old shit essentially, because I do remember the old PMI, the old flash services for EU GU. I tried to trade it, and I noticed that when I traded, it made very two large impulses down. That essentially made two large impulses down, one at 350, one at 330, just to make it to its objective. So let's see when that was. It was in June, but we don't know. I'm trying to think how to check one. Okay, so last month was June 23rd. Or no, July 22nd. Holy shit. July 22nd was when the last time this news happened. So if we go to July 22nd, you can kind of see it here. Now that's stuff I'm seeing. So you can see how essentially price had two relative equal lows. The buy side was already purged, and it did one dump at 315, and then it does another dump at 330. So it does it in pairs. So very likely that's going to make some kind of really large aggressive move quickly twice in the same continuity direction, because it is the same currency. And if you look at like dollar, when it did that, it obviously did the complete opposite. It went it did an up and then an up. So they're going to inverse each other, absolutely. But you can see how they kind of use this to purge buy side to get involved, so that way they could run it the other way and attack all the sell side that was underneath here. Or in Euro's case, it did it to attack the buy side. however you want to look at it. Euro dollar and dollar obviously inverse each other. So as for this week's Power 3, I'll admit it was pretty crappy for the week because we really just opened up here and then we just dumpstered all week. Came into this range, did some nice manipulation on Wednesday and then just tanked it anyway. So it really wasn't a good weekly Power 3 in that sense. The indices did a much, much better job at it. Indices opened up here, manipulate high, kind of did like a 3 drives, almost 1, 2, 3, and then does a nice reversal up here prior to GBP's CPI, I believe it was. Made a nice move down, retrace for FOMC and distribute it lower, right? And this is the weekly open at Monday midnight. So the same kind of Power 3 concept that we're always looking at, but now on just a much larger scale on the week. So on the indices, it was great. On like the dollar or the euro in this case, it was, like I said, it was just a like this was open. It was just a moonshot. There was nothing. There was no manipulation underneath the opening. It was like, we gotta go, and it just aggressively just repriced through everything. So we'll have to see what happens. But for the most part, those are essentially the targets on euro dollar. Dollar is, again, euro. We're shooting for this low. How can we do it? Possibly rebalance these gaps in here and then continue lower, which would infer that dollar needs to come lower, which would be very nice if it did. And then it can continue on its monster run that's probably going to continue on because America, as they say. So it really comes down to how much can the NASDAQ and friends really feel like attacking. I think is really what's going to come down to. Because the fact that NASDAQ is taking these lows and is repricing into here, does it want to take these and, keep going? Because that means ES and YM need to follow it, right? Because they're still way up in here, so they still have daily lows to take out. Although more than likely, I'm planning them to probably do it Tuesday, or if they do it Monday, even more so, we need to be possibly looking to go the other way around. But a $20 move in ES in August is, I'm just going to assume, unlikely when we have kind of the fall coming up and we have much heavier months coming in hot. That's pretty much the outlook on the week so far. Obviously, Sunday can change. Going into Monday, you have any true gaps that open up. For example, on futures, we had one on Sunday. This true gap that existed in here from this close to this open, it was filled almost immediately, in a day. But there have been times where, the other infamous one from here took 2 weeks to fill. So true gaps do matter in that sense. They will definitely change the outlook on what we're expecting, but I just want to do it Friday before I even have that opening to see what happens. But overall, in the course of like 2 weeks, definitely, come down here or down into here and then run these highs. Because these should eventually get lost, but I don't want to target them this week because there's no point. It's too much movement to have in a week when NASDAQ is already showing signs of wanting to reprice this gap from this news.